Hi, this is Kerry Artag with Wicked Stocks, bringing you your daily Apple report for Monday, October 9th, 2023. Before we click through all the charts, just as usual, I want to encourage you to please click like if you haven't already. Subscribe to the Wicked Stocks YouTube channel. Share the content, if you would, with friends and colleagues. And check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos, just like the Apple report. Daily analysis in the SPY and the Triple Q, that is the S&P 500 and NASDAQ 100 ETFs. Weekly analysis in the S&P 500 index, the NASDAQ 100 index, the long bond ETF, that is the TLT, as well as two individual stock picks a week that you never see on YouTube that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor, always looking for 20% moves or more on those stock picks. Last week was McDonald's and UPS. That's right. The prior week to that, NVIDIA, AMD, and we'll be doing two more this week. On and on and on, 8 a month. You can check it all out. Everything I just mentioned for no cost. For 5 days, we offer a free trial up front. So if you sign up for wickedstocks.com, you get a 5-day free trial with that. You can check out everything. If you don't like what you see, you can cancel your subscription at no cost to you whatsoever. So on with the charts. Take a look at the big picture. We tested a couple of weeks ago this long-term support area that this week is 166.07 to 167.49. We had settled above it in May, setting off a long-term buy signal, anticipating eventually the 228.66 long-term rising channel top. So the way I'm still breaking this down is, bottom picking 166.07 to 167.49 in anticipation of 189.55 as a 1 to 2 month target, and 228.66 by this point next year or sooner. Now, in terms of the what played out last week, we're now expecting 189.55 over the next 2 to 3 weeks, where we could actually top out perhaps through November, fall off again back into the mid to upper 160s. We could fill this wedge out for another month or two. It would be a settlement in the coming weeks above 189.55 that would set up a significant up leg as we move into Q1. 3 to 5 months would not surprise me for it reaching 228.66 following a settlement above 189.55. But the way I'm going to frame the 1 to 2 month dynamic right now is solid support in the 166.07 to 167.49 region, anticipating 189.55 as a 1 to 2 month target. And as I mentioned a moment ago, it was the settlement last Friday above this 174.56 to 174.95 region, combination channel top and descending 1/3 speed line, that having settled above does now represent 189.40 as a 2 to 3 week objective. So this is a solid zone to buy for day traders, 3 to 5 day swing traders, and 3 to 5 week swing traders, because all of those are all systems go to the upside. The bottom picking for the day itself at 174.95 in anticipation of 178.49. This is a new 1.5 week rising channel top, just an intraday resistance, but know that if we hold below 178.49, that does allow the market to ease back into that 174.56 to 174.95 area on an intraday basis. Pushing or opening today above 178.49 would, on the other hand, signal 180.51, which I have as a session containment level, can contain daily buying pressures possibly into later week. And so we could come off of 180.51, possibly back into the mid 170s again within several days. We could fill this band out between 174.56 and 180.51 into later week, but the emphasis remains bullish into later October above 174.95, and so closing above 180.51 is considered an eventuality. And if so today, we probably will this week, with that kind of momentum, reach 186.26, the beginning of a wide band of meaningful midterm resistance up to 189.40 that can absorb buying through the balance of October and into November. So if you're a 2 to 3 week swing trader, first off, if you're a 2 to 3 week swing trader, you may have been buying Apple anyway when I was telling you about the significance of the 166.07 to 167.49 support area when we did test it a couple of weeks ago. But you're buying weakness obviously there, and now you have an opportunity to buy strength, a breakout to the upside above 174.95. anticipating 180.51 this week, 189.40 over the next few weeks. If we close today above 180.51, I think we could reach 189.40 by the end of next week, possibly by the end of this week, where we can top out into November trade. So if you are long now, whether you were bottom picking the 167 handle a week and a half ago, or you went long on Friday with a settlement above 174.95, your profit taking area, at least on some of it, may well be the 189.40 formation, especially if you're more of a 2 to 3 week to 3 to 5 week swing trader. That is the play at hand. But if you're a longer term investor, as I mentioned a moment ago, and if you did buy the market recently in the 167 handle when you had that opportunity 2 weeks ago, you may just put Apple in your back pocket and hold it through the rest of the year and well into next, because I do think there's a decent chance 228.66 is in reach by this point next year or sooner. I will say that if over the coming weeks we close above 189.55, then you might consider buying even more, because we're likely then to see a protracted, significant move 3 to 5 months to 228.66, where we could top out actually through all of 24. Let's take a look at the downside. I'm going to go back to this chart here and just say that if we break or open today below 174.56, I only have as a minor point 173.74. But this, I just wanted to emphasize that, yes, breaking 74.56 is bearish, but in terms of clear momentum reversal into a later week, that will be 173.74. But I will say this. If you went long Friday above 174.95, anticipating 189.40 over the next few weeks, and if we close today below 174.56, even if we didn't close or don't close below 173.74, merely closing back below 174.56 is reason enough to exit a long position and even consider playing the short side as we move into later week. If you're a 3 to 5 week swing trader, closing back below 174.56 should actually result in another test of the 166.07 to 167.49 area, where once again we can bottom out really through all of next year, as I've been saying, and above which 228.66 in reach by this point next year or sooner. I will say that if we close the week below 166.07, and that is 164.40 or lower on Friday, then we enter a meaningful longer-term sell signal that I think over the months to follow, 2 to 3 months perhaps, 3 to 5 months, should yield the 131.82 long-term channel bottom, if and only if we close below 166.07 by a full 1% margin. I will say that on the way down, and I don't know why I'm going there, but I will mention that on the way down, this narrowing zone presently between 159.36 and 162.12 can absorb weekly selling pressures, and if settled below, will add further weight to the market, thereby allowing that 131.82 formation in as little as 2 to 3 months. But we're nowhere near that right now. This is a bullish market into next year above 167.49, and really through the rest of the year above 189.55. I think I've said enough. I'm going to leave it at that. Please click like, share, subscribe, and check out wickedstocks.com. I'll be back tomorrow with Tuesday's Apple Report.